Big day in earnings yesterday in our morning reading. We have Apple and Garmin soaring. We have Twitter sinking. We also have FOMC rates with no change. Vol rises, then falls. 3 of 9 sectors move higher on Wednesday. XLK, XLV, and XLB were the strongest sectors, while XLP was the weakest sector. Oil futures fell 73 cents to close at 41.91. Breadth weakened compared to the prior session as decliners led 1597 to 1379 in the New York Stock Exchange, and advancers led 1485 to 1095 on the NASDAQ. The FOMC ended its two-day meeting on Wednesday with no change in interest rates as expected. In the S&P 500 snapshot, a fractional decline on the Fed Wednesday. Fed Wednesday turned out to be a ho-hum event for the U.S. equity markets. The combination of parsing the FOMC statement, analyzing earnings, and fretting about the growing glut kept the benchmark S&P 500 in a relative zombie state, especially for a Fed Wednesday. The negative 0.12% closing loss extended the fractional up-down pattern of daily closes to 10 sessions. And speaking of oil, West Texas Intermediate crude fell 2.33% and is now at 18.65% below its interim high of June the 8th. The yield on the 10-year closed at 1.55%, down 5 basis points from the previous session. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:31 a.m. Mountain Time, and I'm recording this in preparation for the market day of July the 28th, 2016. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. Okay, let's go ahead and dive into the morning report. And at the time of the cut this morning, we had fractional losses on all 4 U.S. Broad market indices, and they're all 4 just below scratch. None of them moving enough to have any kind of real significant motion. Crude oil is up about 0.5%, euros up about 0.2%, bonds are down about 0.25%, and gold is up about 1.25%. In overseas action, not much happening there. China just above scratch, Hong Kong just below scratch, Japan down over 1%, Germany just below scratch, and the United Kingdom also just a bit below scratch. And the U.S. focused macroeconomic reports of note for today. You have unemployment claims of the weekly variety and that gas storage. And looking forward to tomorrow, we've got a long list on the international. Let's see if we got anything on the U.S. We have Chicago PMI. And we have a gross domestic product report and University of Michigan consumer sentiment. So several things coming out for tomorrow. In terms of current volatility conditions, yesterday was kind of a ho-hum day. We'll take a look at the charts here in just a second, but not much change from yesterday, which is a bit unusual considering it was an FOMC afternoon. 11.61 on the short-term VIX. Skew has fallen to just above the threshold in which we call this a cautionary area. IV percentiles are all still single digits, with the S&P at an 8, the Russell at a 6, the NASDAQ at a 2, and the Dow at a 3. We did have a standard deviation move put in by one market yesterday, and that was the NASDAQ, largely driven by those Apple earnings. Apple was up substantially and essentially closed a prior gap. I think it was something like 7% at some parts of the day. And let's go ahead and go to those charts. We'll go ahead and throw Apple on here just because it was a big part of yesterday's action across all the markets, really. Apple probably had more to do with action yesterday than the FOMC, so it's kind of interesting. You see the big gap. I mean, this is something like 7%, and you note here, right there, it closed that big gap from the last earnings. So it's interesting how these gaps so often fill. It sometimes takes a while, but it almost always seems that these gaps eventually do fill. So obviously there was profit taking once you had that big jump, and you know, probably some really happy short-term traders if they were on the long side. If they were on the wrong side, they got crushed, and always very, very dangerous on those earnings plays. It's a binary event, and there's not a lot of opportunity for adjustment or rescue on many of those earnings trades. You basically have to define your risk and then set it up that way. But anyhow, clearly, while their beat wasn't by much, you know, 3 cents kind of thing, the language around their expectation going forward was positive, which is unusual somewhat for Apple. They usually kind of badmouth the future and then try to have a beat. And anyhow, this time, big beat. So that obviously affected the NASDAQ. We'll start with that one. And you see NASDAQ had a good day, but Apple's also part of the Dow now. And now on the Dow, of course, there were other things going on, and it didn't carry the day over there quite the same. You see also from the FOMC standpoint, while we had some intraday action to some modicum degree, it basically ended up with, you know, probably a spinning top or near doji, basically indecision, and that's kind of where we are left. In fact, if you look at the S&P futures, you see also here, it's not really quite a hammer, probably closer to a spinning top than anything else. It's pretty much just in this sideways consolidation, and nothing has changed that yet, including last night's overnight action. In terms of the Russell had also a doji yesterday. So really a lot of indecision and lack of pointing to any clear direction coming out of the indices yesterday. Now, the bonds were far more interesting. Bonds made a significant move yesterday, and it's retraced a little bit of that today, but that's not surprising. But anyhow, bonds broke out of their sideways pattern. Now, they broke up, which normally means that equity should be breaking down, but that's not what happened as of yet. Now, gold also broke up. So the two areas where you kind of look for as risk off and defensive kind of plays, areas to protect your cash, you know, they did well with that FOMC announcement yesterday. And you see the dollar had a significant move yesterday, right here. So dollar down, bonds up, gold up, and equities all basically flat. Let's go ahead and take a look at our stubs. Let's here's our staples. Staples were down yesterday, so that would seem to say, you know, the risk on move should have been going on. And then utilities also down yesterday. We showed bonds were up, and let's see here. Now let's take a look at volatility. Volatility really didn't do anything. So where did it go? Well, let's go ahead and go to our daily report. We've got our sector rotation there. Maybe that'll help us understand just what happened with all this yesterday. In terms of our basic market timing section up here at the top, Our intermediate term phase opinion, still phase 2, trend reversal, the break of diagonal resistance, now horizontal resistance. The 3 market timing signals, no changes from yesterday. IBD still bullish at a confirmed uptrend. The GMI index also bullish with a perfect 6 out of 6 and a buy signal in place since 7-1. And the 3rd market timing signal from the the stock charts decision point scoreboard, are universally bullish in the short to intermediate term. The one fly in the ointment continues to be that long-term signal. Position sizing opinions on both models for the portfolio investor as well as the volatility investor is at 100%. Intermediate term market postures across all 4 indices are still exceptionally strong, and they're supported by bullish sentiment lines. So we're expecting that bull moves will be longer and more pronounced than the bear moves. The strength of the trend, very strong. In terms of strategy opinions, no changes from yesterday. Everything's within acceptable tolerances for the initiation of new positions. And now that we're past the FOMC announcement, really everything's kind of all clear. Just kind of be either aggressive or conservative according to what you're talking about. In other words, if it's a low beta position, you might be one to be a very aggressive with 1 in the money and 2 out of the money strikes. If it's a higher beta position, you might want to consider selling puts to get in, or you might want to consider, something that might be more even in the money and out of the money. We've got this kind of tenuous situation where we're up here at all-time highs, and yet at the same time, there doesn't seem to be any momentum or energy present. But that's also can be misleading because often bullish market trends move incrementally a little at a time and you climb that wall of worry. So you need to build your bullish exposure. Just be careful that you don't put it all on at one time. In terms of the current warnings, there's just so little to really get excited about. In the volatility basket, there's only 2 low-grade warning areas. Actually, this one dropped to 125. I should change that. And then trend base, everything is strong. In fact, very strong for the bulls on this signal here at 458 on the new highs in the New York Stock Exchange for the 1-month period. And the key intermarket risk aversion indicators, they're all still 5 risk on. There do appear to be on 2 of these the start of a rolling over process. We'll watch to see if that does fulfill and we start to see more signals coming. That could be very important to tell us that a retracement is starting to set up in the market. From a sentiment standpoint, still extreme sentiment. It's still, up here in the 80s, though it did edge just a little bit yesterday off from the prior score. In terms of those sector specific areas that we referenced a moment ago, you can see that a number of these sectors have kind of edged off in terms of their strength. Transportation, consumer staples, energy, and utilities notably, especially in the short to intermediate term, have seen some deterioration in recent sessions. In terms of what happened yesterday, look here at the bottom. Staples, utilities, where's telecom? But telecom's way up here. So we had a mixed bag. So some of our stubs, performed poorly, but some of them performed well. And then on the other side, you had some of the higher beta areas relatively poorly, and then some of them relatively well. So I don't think this is a clear picture of risk on, risk off rotation yesterday. We saw the big moves were in gold and bonds, but other interest rate sensitive sectors were not universal in their responses. Now, telecom's a really small sector. Basically, 5 companies pretty much make that group up in many ways, in terms of size. So it could be that there's a story going on within the Verizon and AT&T kind of arena that gave us a different answer than some of these other interest rate sensitive sectors that were more universally down. So I don't know what the story is on that. I didn't look, but there may be something more going on there. Bottom line is there's not a clear picture in terms of yesterday being, institutions exposing themselves to significantly more risk, nor was there a clear picture that they were going to safe haven status. So we're kind of left with a muddled mess, as it were, and we'll have to wait and see if we start to get some clarity, start to point out of these different sectors. Okay, I think that's probably enough today. Bottom line is that the market continues on in this consolidation pattern, and until it breaks one way or another, it's probably not good to make too much of those tea leaves. And, there just aren't enough strong indications to tell us whether we're setting up for a retracement or that we're setting up for a breakout at this point. Let's go ahead and wrap up. And disclaimers, as always, if you need more time to review the disclaimers, just hit the pause button. Always note, of course, also that the full set of disclosures can be found at this hyperlink down here at the bottom of the slide. We'll see you back here for the next session with the market preview from Falcon Global. In the meantime, manage that risk, and everything else should fall into place. And as always, I encourage you to go out there and go learn something. Good trading.